All right, let's talk about copper. You see it everywhere. Pipes, wires, even the coins in your pocket. But right now, this very common, kind of humble metal is at the center of an absolute global frenzy. It's gotten so wild that people are seriously asking if it's becoming the new red gold.
And this is exactly why. On January 14th, 2026, the price for a single ton of copper completely smashed its all-time record. It hit $13,310. Now, a number like that, it doesn't just happen. It's the kind of thing that makes the entire world stop and pay attention.
So, that's the big question, right? Why the massive surge? How does a metal we've been using for thousands of years suddenly become one of the hottest things on the market? Well, that's what we're going to break down. We're going to look at the powerful forces behind this spike and what it's really telling us about the global economy.
To really get what's going on, you have to understand that there are two totally different stories playing out at the same time. First up, let's look at the bull case. This is the exciting, future-focused argument for why copper prices are shooting for the moon.
What we're seeing is basically a perfect storm of demand, and it's coming from all the industries that are literally building the future. The massive data centers that power AI, they are absolutely stuffed with copper. The whole green energy transition, we're talking wind turbines, solar panels, electric cars, all of it is incredibly copper hungry. Then you throw in a rise in global defense spending and huge infrastructure projects, and they all need tons and tons of copper.
And you really have to see where this demand is coming from. A staggering 60% of all the new demand for copper between now and 2030 is expected to come from just one thing: building and upgrading power grids. I mean, that's the backbone for our entire electric future, and you just can't build it without this metal. And yeah, while China is still the biggest player, you can see the US and Europe are really starting to ramp things up.
But hold on a second. Not everyone is buying into the hype. So let's flip the coin and look at the other side of the story, the bear case. This is a much-needed reality check on all that excitement.
And this view comes from some of the sharpest analysts in the game. Right before that record-breaking price spike, Goldman Sachs took a hard look at the actual numbers and came to a totally different conclusion for the near future. They're basically saying, hey everyone, not so fast.
So why are they so skeptical? Well, it just comes down to the data. This chart shows the global supply balance. In 2025, there was a surplus of 500 kilotons. That's 500,000 metric tons more copper produced than the world actually needed. And even with all that booming demand we just talked about, they still forecast a surplus for 2026. So the key takeaway here is, despite the crazy prices, there's actually more than enough copper to go around, at least for now.
This really suggests that a big part of this price rally isn't about a real fundamental shortage. It's being driven by short-term jitters. Things like companies hoarding copper because they're worried about new trade tariffs, or a couple of mines having temporary supply disruptions. These are the kinds of problems that can and probably will go away. Okay, so how on earth do we make sense of this? We've got one story about a future with massive demand and another about a present with too much supply. The key is to realize that both stories are actually true. What we're seeing is a story of two different timelines colliding. Here's a great way to think about it. The short term is like looking through a magnifying glass. Everything gets amplified. The daily news headlines, the chatter about tariffs, those supply hiccups, it's just noisy and volatile. But the long-term view is like looking through a telescope. The picture becomes much, much clearer. You see that undeniable structural demand from the green transition, and you see that a future supply shortage is on the horizon.
This timeline really lays it all out for us. You can see the short-term surplus that was predicted in late 2025, followed immediately by that headline-grabbing price spike in January 2026. So what gives? Well, just look further down the road. By 2029, that surplus is expected to completely flip into a deficit, a real shortage. And that's the structural shift that has long-term forecasts pushing prices even higher, maybe toward $15,000 a ton by 2035.
All right, so keeping these two very different timelines in mind, what are the key things we should be watching for? What's going to tell us which story is actually winning?
The most immediate thing to keep an eye on is a potential U.S. tariff on copper imports, which could happen around June 2026. It tends to create a predictable little three-act play. First, companies scramble to buy and stockpile copper before the tax kicks in. Second, all this front-loaded demand temporarily pushes prices up even more. And then third, after the tariff is in place, demand cools down and prices usually correct themselves a bit.
So why does any of this matter if you're not a commodities trader? Well, because copper has a famous nickname, Dr. Copper. For decades, its price has been seen as a pretty reliable barometer for the health of the entire global economy. When copper prices are high, it usually means factories are busy, construction is booming, and the world is growing. This whole rally isn't just about a metal. It's a massive signal about where our economy is headed.
Which brings us back to the ultimate question. Is copper truly the new oil, the one essential resource that's going to define our economy in the 21st century? Or is this just a temporary bubble, puffed up by short-term fear and speculation? The future of the global economy might just depend on which one of those stories turns out to be right.